All right, good afternoon, traders. This is Heart Pumper coming to you from the closing print. We'll be going over these watch list stocks here in just a couple minutes, letting a few other people get in here. You can check us out at the closingprint.com. And we have all our positions here. You can sign up for the chat room, live stream, which CV is on every day, going over charts and trades. So you can check that out at theclosingprint.com or send me a message and I can get you set up with that. All right, I'm going to go ahead and start here. So basically what I did is, sorry, that's not one of my stocks here. Through Market Smith, I went through the Growth 250 and basically just set up a list of the stocks that were showing the best relative strength, some that had the best institutional ownership and earnings. And that's kind of what we're going to go through. I'm going to have it set on the daily, but the weekly provides a great overview during this pullback. And again, Workhorse, obviously, we've been in this, trading this from the breakout, believe as actually under the breakout, 1767 or 1768 was our entry on the Friday that I was doing the live broadcast. And this continues to just show excellent relative strength and volume. So on any pullback in this stock, I'll be looking to add or at least initiate a position. It's getting a little stretched from the pivot area. So a pullback to pivot, it's actually past the profit taking zone that IBD or Market Smith suggests here on the pattern recognition. But a pullback to the pivot or even the 21E would be a great opportunity to add to your position or initiate a new position. We see the relative strength line continues to climb, which is what we want to see. We see the fund ownership increasing. No big funds in this yet, so we'll see if that continues to increase. The next one we're in is Zoom, which actually, obviously showing excellent relative strength to the market. Our initial entry was 368, and then we added on a position to that, and our average now is 384. So excellent gains on that. Weekly is showing pullback after the EPS, and then continues to show relative strength. Again, this is just a new issue since June 2019, which is what we like to have under a year. Disrupting technology, institutional ownership has almost quadrupled in a year. Contra funds got a small position, but I would like to see this increase with some more funds. And again, that's another position we're in. Peloton, I'm not in this, or a few people in the room are. Showing excellent relative strength to the market, great volume. EPS was good. Institutional ownership has increased significantly. On the daily, it is forming this flag. We have these kind of two wicks up top here, but I would look at any pullback to the 21E to initiate a position or initiate on the breakout. Next stock we're going to go over is Tesla. Obviously, we had a great after hours buy on that at 308. I posted my entry in the room, and then we've added on to that position. I know some other people are in this with us also. So we've had just a great move and a great run. If you took some profits, relative strength line is still holding up well. Funds are in this, obviously. So any pullback to the 21E here would offer us an opportunity to add to our position or initiate a new position. DraftKings, just great relative strength and volume. For the week, the RS line continues to increase. Funds are finally getting in this as of June, which we'd like to see. So there's institutional ownership. So we'll look at that going forward. I do not have a position in this yet. I did down here and took a little bit of profit and kind of got stopped out in this like choppiness. And unfortunately, I didn't stay with it. This breakout would have been excellent, but that's okay. We've had some other ones that we've looked at and had great winners on. LVGO, I like this. It's held the 50-day, which is the 10 MA on the weekly. Just had a nice pullback, forming a nice tight consolidation here. Pattern recognition's calling this stage 2, kind of flat base consolidation, it looks like. Declined on lighter volume. Obviously, this week we had EPS and quad witch, so This volume may be discounted slightly, but institutional fund ownership's increasing, RS lines holding up, and now we may be heading back to the top of this consolidation area. I like this on the daily here, kind of this downtrend breakout here above the 21E. So any pullback to the top of this breakout area around 128.86 would be a great area to initiate. This had a little bit of area overhead, but we're working through that at the 131. So then the top of this consolidation would be the next area I would look for this to move, and then if it decides to break out on heavy volume. So our prime entry would be down here in this consolidation base. We'll start getting in here, and then when it starts to break out, other buyers will come in. So we'd rather already be in and adding to our position when this begins to break out of a proper IBD buy point flag recognition. Teledoc, the same deal, bottom of the base here, consolidation. I'd like to see this at least get above the 50, increasing volume, relative strengths increasing, huge institutional ownership. Some of the big funds we follow are in this, including the Columbia Small Cap and the KRI Mid Cap Growth. So we'd like to see this go back to the top of the consolidation area. Again, I'd rather be in down here if possible in a starter position, and then add as we get up through here, and then add as we get up through the breakout on a daily and weekly time frame. So we'll already be ready to be in a profit position on that. HCMP, I was in it last week. I took some profits on it, and I don't have a position going into this week though. Bio's got a great bounce on Friday, so this is definitely one that is high on my watch list. Going in this week, institutional ownership's great, relative strength lines increasing. Only down negative for me would be the EPS. This past quarter, it's kind of bounced around. So that's one thing that is not, prime IBD buying, but it's showing relative strength to the market. So we have to take notice of that. Crowd, just another one showing excellent relative strength to the market. Anything that's above the 21E actually is would be one that I would look to immediately, even above the 50 MA, which would be the 10 MA weekly, because most of the growth stocks have broken down under that. But it's just holding and it kind of just barely creeping up here. EPS was excellent, institutional ownership's increasing, volumes increasing, so pretty much everything we want to look for. So this one I'm not in at the moment, but it is at the top of my list also because we are close to a pivot and close to 21E, so our risk management would be very simple. Even if you're under here at 118, that's a little bit over a 10% stop, so that's a little bit too much for me. I would give this, 7 or 8, depending on what your size is. You could do a starter position and give it 10%, but that would be about a quarter of your normal size position, and then you could add on a breakout above this kind of 133 area up into this area. EMPH, the solars are number 2 on the groups, so it's definitely showing relative strength. Again, may discount this a little bit because OPEX options expiration, but nice pullback to this previous pivot area, held the 50-day. Like to see it get back above the 21-day and then possibly head up. Only reason I'm really looking at these is because of the group strength. So group strength is, roughly 20 to 30% of the IBD kind of tier system that they like to look at. The market is 50%, so we need the market at our back. But FSLY actually is holding the bottom of this base. Nice volume on Friday. Relative strength line has not really dropped as this is pulled back. So that has been extremely interesting to me. 71, 72 area is important, but we have to get over this 85, 86, 87 moving average kind of flat to down confluence area. So if we get over that, then 99, 69 is the next area, and then on up. Not necessarily a true IBD base at the moment. It is a big flag here, so it's almost a high type flag kind of look because of the move in price. So definitely that's one I have on my list for next week. APPS, we're in this. Just excellent move. we took some profits on Friday. Just a great stock that showed just crazy relative strength to the rest of the market. I was pulling back, and that's the one we pounded on, and just provided us a great opportunity this week for I believe it was a 15% gain on our position, close to that maybe. So it was over 10%. So that's what we look for there. FVRR, again, holding up relatively well. My only problem with this stock is it's a little bit lower volume. But again, not really a pattern wreck here for MarketSmith, but it almost is a flat base for me. It just doesn't necessarily follow the flat base parameters that I posted in the trend following room. I'd like for you guys to print that off. The flat base has to be a 5-week minimum and then 10 to 15% with 30% prior uptrend. So that's why it's not really recognizing that. But again, it looks great. Weekly looks great there. EPS was great, and the institutional funds are coming in. So that'd be one we can look for next week. SE, we were in this for this long uptrend. We took profits, and then I got out of most of my position. I was in it all the way up to here. Got out, got back in, and rode this up a little bit higher. But it was just a monster trade in a long-term account. Relative strength holding 98 here, institutional fund ownership increasing, contra funds coming in with a small position. Like to see that increase a little bit. The volume was a little bit higher on this pullback than I like to see, but it is forming this kind of nice flag, real tight price action. So we can definitely see that above 150 is pretty much where we want to look to initiate a position, and then our stop would kind of be below here at 142. Again, AMD is pulling back nicely as the rest of the semi stocks. The reason I'm going to keep this on my watch list is because of the volume, and then basically this would be a proxy for the rest of the SMH. If AMD starts to turn, I believe a lot of the other stocks will begin to turn also. NVIDIA, again, just it's holding relative strength to the market. Okay, it's above the 50 MA. It's a huge growth stock, and then we have 3,000 funds in it. So if this continues to hold up and no institutional funds sell off significantly, then that is definitely one we want to look to add because we already have a position in. AVGO had earnings. Just they beat earnings by slightly, but then the volume contraction here has been excellent. A little bit higher Thursday and Friday on the volume, but this could be for OPEX. But again, above the 21E. So any pullback into this pivot area for me would possibly be a buying opportunity. If it continues to hold the 21E, then that's definitely showing great relative strength. CELH tried to break out on Friday, huge earnings, institutional fund ownership's increasing. None of the funds are in it that we like to see, but kind of a newer stock that's moved up lately, and then it's kind of gained popularity, I think, in the drink area. So RealPage is not one I'm looking at. I'm not sure why that deleted. Didn't delete. I was looking at BRP. Let's see. Sorry about that. It's not down there. So sorry. BRP was the other one I was looking at, which is holding up really well. Oops. BRP. Good volume, or this might have been OPEX, but these earnings again are, they out of the ballpark, and it's pulling back to the 21E. The only problem is it's in a group that is not necessarily one of the top groups, so it's not one that you want to just go right after, considering you want to be in the top 25 groups on that. The other ones I was looking at, let me throw these out there. Band, I think I looked at that one. Looking at my list real quick. Band, yeah, excellent on blue dot scan, relative strength 96, institutional funds ownership's increasing, and earnings are looking good also. So this is one going into next week. Basically above this 157 area, or if we get a pullback into this 146. I'll look at a 60-minute time frame, for intraday. So look at this flag right here. It's building nicely. So 149, any pullback into there, and then a breakout pretty much above this 159, 160 area is what I would look for. So that is what we can look for going into next week. That was all on my list. Let's look. A couple people are posting some stocks in the room. So GFI, let's see, it is in the top some groups, which is good. 11 million, interesting volume and EPS, and institutional ownership's increasing. So this is in the mining sector. PVG was the one I was playing. That was the strongest. We had about a 20% trade on that, which was excellent. Only I do not like this candle on Friday. That's the only candle. You see how it finished in the bottom portion of the range. I would like that to see and hold up a little better. And then the weekly, see this topping candle, couldn't try to break out, couldn't get above this consolidation pivot area, and then kind of rejected. Now it's pulling back to the 10 MA. So I do like the relative strength though, and the EPS is great. So that's one you can keep on the list, but I would need to see the price action get a little bit better into next week. It's just a big consolidation area. So this could pull kind of close in lower range almost at the 21 E. So this could pull back into this area here, into the 11 or 12 and 1180 area, unless it just does an about face and turns around and goes above 14. But that's one. Yeah, all the metals and mining look good, and a lot of the biotechs were popping up on a lot of the screens. I'll go through a couple. That doesn't, I don't really like that action on Friday. As you can see, again, it's OPEC, so we can't really look at that, but it's going back deep into this handle. See this cup and handle on the daily pattern rec. So that needs to show relative strength to the market. Big institutional ownership there. But PVG was the one we traded, which was pretty much beating the rest of the market. So that's why we took it. It was a breakout here, and then we had this move up here. So that's the one I was in. Relative strength was showing was good. But again, volume on Friday, and these look like they might be failing and pulling back towards at least here. So we could put this on alert and pull back to the watch list. Alexion. Yep. If there's any other ones anybody wants to look at, Alexion, I like the look of this one. If the biotechs decide to go, the R strength is the only thing that's concerning on this. It does have volume. It's forming this cup. Maybe it's a stage 1, which is awesome because the base counts has been reset. So above this 121, definitely looks like this could move higher. It's tested it here and then pulled back. So we'll see what the volume looks like on Monday, but I love the look at this. It held the 21 on Friday. So I'll go to the intraday chart here. Kind of big volume on these also, which are nice. Not necessarily a defined pattern like this with the breakout, but I like the look here. So for me, above 115 would probably be an entry, 115 to 116, and then my stop would, I'd run about a 3% stop. Okay, so you're probably looking at about $3. So down below this 113 area on that. Just because of the market conditions, that's why I'm running roughly in between a 3 and 5% stop on these. Ed, yeah, they're available on MarketSmith. Mike Weber has left IBD and is in Austin actually doing some hedge fund stuff, but they're all available in MarketSmith. If you click browse screens here and you can search here, and it'll pull up all your screens, and it'll pull up anybody that has his name in there. It takes a few minutes because he has a lot of them. So yeah, these are all Webster screens here. You can sort by date. There'll be other people that created it or copied it from Twitter, but you can also search by author, which would be Mike Webster. And these are MarketSmith ones here. I don't know if he actually has his screens left in here. I would assume they are. Let's see. Ryan's another good one to follow. He posts a lot of Webster scans. So they may have changed these to MarketSmith scans instead of Mike Webster now. Oh, I mean, his name's on these, and these are the ones that he developed. So you can look through those. But yeah, there's a lot of, I use a lot of his scans. I use, there's a couple other guys that post in MarketSmith that are IBD people that have excellent scans. David Ryan Screen, obviously he was on the IBD podcast. He is excellent. And then if you go to the MarketSmith stock screens here, these are, you can actually go in the Warren Buffett screen if you want, and that'll show pretty much all Warren Buffett stocks. or not all of his stocks, but stocks that he screened for, or his screening parameters, I guess I should say. So again, that'll give you the list. And then basically what I do is, so we have 39 of them. So, I'm sorry, 30 of them. So I would sort these. You could sort by volume, but I would sort these by the EPS rating first, okay, because that's earnings that I would like to see. And then you could sort it like this and look at the top. Then you could also sort it by volume. And we can I just cruise through these real quick and I'll show you. Obviously, some of these are probably going to be Viv's on my list also. I guess I didn't add that one. But these should be holding relative strength to the market, okay? Just because the parameters he has set. They should, yeah, be holding relative strength to the market. So those would be the ones you want to look at. Hope that helps. GME, I have a bit left from a few weeks ago. Okay, we'll take a look at that one. But anyway, just go through those. Obviously, you want the best of the best. So that's why I have this screen right here in Market Smith. It's called the best of the best. And you see there's only 14 stocks on it. Okay, so if the market's going to help us out, we would want this to be increasing. And so these are basically the best earnings, the best strength, and the best ratings. And you can flip through those. Okay, PFSI has been excellent. NVIDIA has been excellent. JD is actually setting up really well. I like the look of that one also. Big Lots and a few other ones in here that we have traded. Sale actually looks good also. So GME, yeah, let's look at that one real quick. Yeah, looking good. GameStop, I believe, yep, that looks good. Institutional ownership's decreasing a little bit. Came out of that base, which was nice. I have a bit left, was stopped out. Yeah, that pullback here, I think stopped a lot of people out. Only thing is this EPS down here. I mean, they're just not, the company was almost bankrupt. And I think they're still close to bankruptcy. I don't remember what all of it happened. But I understand what you're looking at, the volume, and it's breaking out here, but I want the best of the best. Okay, so basically I want this, that is what I want. Workhorse, which is giving us 30% gain, counter trend to the market. I want apps, which has been giving us a crazy gain. Okay, so what happens is 50% of the stock's move is related to the market. And again, GME is showing relative strength of the market, but there's lots of other factors and parameters. It has EPS. So these can continue. I mean, when the market decides to bounce, if and when that happens, these will continue to rise quicker than the rest of them. All right. So that's why I'm in these and I want to stay in those, and those can continue to turn into your 100% winners. Okay. Sound good? All right. That's it for me. There's a watch list going into next week of about 20 stocks. Again, we're in a distribution phase. Most of the indexes are under the 21 or under the 50, so we're going to have to see that turn around for us to get a tailwind for any of these growth stocks. And most of the people I talk to, most of the people I see are roughly only in about 30% invested at the moment. Everybody else is in cash. No, Captain, man, I don't trade those. I know a lot of people do, and it's fine. It's just, I want people to be in the best of the best. I'll pull a couple of them up for you. I mean, they're just so volatile, man. I mean, I understand what the purpose of them are, and they're pulling back. And if people want to trade them, it's fine. But I want to be in things that I know have institutional ownership, have good earnings, and I want the 100% winners. I don't want, I mean, even though we got 15, 20% workhorse and apps, I want the life-changing money winners on these. And DKNG may be one, and these SPACs may be, but these are just short-term trades. I mean, look at the volume that, it came from over here, and then they had the IPOs. And, these, I don't know if these institutional ownerships, if this continues to increase, then I might get interested in it. In some of these, what's the other one? I can't remember the other ones. There's a lot of them. Yeah, I mean, that's fine. I mean, intraday trading them is fine. I mean, I have no problem with you guys, intraday trading. It's just, I want to be in the things that I don't have to watch, every tick. Um, you know, but there, I mean, if you can't get excited about this thing, breaking out and giving us um, over a 30% gain, from our original entry. And so what I would suggest is you're tearing into this thing and you're increasing your position size. I mean, and this thing is showing crazy strength and crazy volume coming in. And on a 30% move, let's just say you had 20% of your account in that as you tier in, or even you get to a 25% position because there's nothing else in the market that's doing well. I mean, that's just, crazy, crazy money without having to really do much. Okay. And that's what I want to preach to people is I'd rather you be in something that is institutional owned, increasing and showing relative strength to the market, even if you're in a small size, than trying to trade a lot of the spec stuff intraday. Just because the volatility is a lot higher right now, and you're going to get stopped out back and forth so quick, and then you're going to get chopped up. So it's just easier to do these names. So yeah, it's had a great run. But again, if you read the life cycle trade, this may just be getting started. Okay, so that's the reason I try to get in these is when the institutions decide to start getting in them is when the really big moves happen. This 3 to 22 is just kind of the initial phase. All right, and then we get this due diligence phase by the institutions, and then we get the breakout. Okay, so this is when the institutions are like, okay, this thing has the probability to go extremely higher. Okay, and that's how we get an FSLY that goes from this down here, doubles in 3 months. Okay, and that could possibly be what Workhorse is going to do when the institutions decide to get involved. This is what happens. All right, so that's why I don't want to be in at the $3 range. And and it's fine if people want to try to get into that. Okay. But you really have no idea. Yes, volume's increasing, but this is still a spec trade. All right. And yes, you can make good money here. I want to be in the trade from the base breakout holding the 21E to when it goes to $100. And I want to hold that. Okay. Like we did in shop. We, caught this reversal here, base breakout, and then we caught this move up to 8, 900, 1,000. All right, added to our position around here. That's what I want to be in, so I can, carry that whole thing the whole time, and just kind of ride it up. That's what I want to be in, or the Amazon trade, whichever one. I want the 100% winners on that. So, all right, okay, that's gonna do it for me, traders. Hope you have a great weekend. We'll see you in the room. Again, we want the best of the best. We want to look for relative strength next week, whatever's showing relative strength. Hopefully the growth stocks will start to get a little bit more flow. If not, then we'll just take it day by day and see what comes our way. All right, thanks.